Time for JesterEngine.com's Daily Tech Rundown. Ford says it will start shipping an in-car AI assistant later this year and is targeting hands-free, eyes-off Level 3 driving on a new $30K universal electric vehicle platform by 2028. Short version, your car might soon talk like ChatGPT, and in a few years, it could actually drive itself in certain conditions.
Yep, Ford's packing a conversational AI into vehicles and building lots of the software and autonomy tech in-house. The goal is more affordable L3 capability on that UEV platform and better margins because they control the stack.
What does ChatGPT style inside a car really mean, beyond clever jokes about telling the car to warm up the coffee?
Practically, it means a natural language assistant that handles context-rich queries, navigation, cargo estimates, scheduling, even multi-step tasks. The difference from regular voice commands is richer follow-ups and personalization. And because Ford is doing it in-house, it can tie tightly into vehicle systems and over-the-air updates.
And the eyes-off Level 3 promise? Regulatory minefield or realistic timeline?
It's realistic but constrained. Level 3 means the car can handle driving in defined scenarios and the driver can disengage attention, but regulatory sign-off, robust sensing, and fail-safe handoff procedures are required. Expect limited geo-fenced rollouts first. Competition with Tesla, GM, and Rivian will push pace, but safety and liability reviews will set the rhythm.
Nice. Let's move on. In legal tech theater, an Oakland judge refused to dismiss Elon Musk's suit against OpenAI, meaning the case goes toward trial. Newly surfaced messages show Sam Altman praising Musk back in 2023 while defending OpenAI's decisions. That's a twisty bit of context.
Right. Musk alleges OpenAI's leaders converted its nonprofit promise into a for-profit pursuit and seeks damages. The court found there's enough evidence to probe whether leadership assurances were made and broken.
From a governance and AI policy lens, what's at stake here beyond the courtroom drama?
A lot. The trial will probe how AI stewardship, fiduciary duty, and organizational structure intersect. If Musk convinces the court OpenAI improperly shifted away from promised governance, that could reshape how AI orgs formalize mission locks and cap structures. It also raises questions about investor roles. Microsoft is named in parts of the litigation, and the broader norms around commercializing advanced models.
Any chance those 2023 messages actually change the narrative?
They add texture. Altman calling Musk a hero and acknowledging missteps complicates simple villain versus hero frames. But courts care about evidence of intent and action. The trial will dig into timeline, board decisions, and contractual commitments. Expect months of testimony.
Drama and the positions. Onward.
Earnings season preview. Yahoo Finance flagged 5 big names to watch: Tesla, Microsoft, Simon Property Group, Molina Healthcare, and United Rentals. Each one tells a different story about demand, AI, retail health, Medicaid trends, and industrial activity.
Exactly. For Tesla, investors will parse EV demand, production cadence, pricing, and margins. For Microsoft, the headline mover is Azure and AI-related revenue. Cloud momentum and guidance matter a lot.
And the others, quick hits.
Simon Property will signal brick-and-mortar foot traffic and leasing strength, a proxy for retail health. Molina's numbers reflect Medicaid enrollment and medical cost trends, which affect margins. United Rentals gives insight into construction equipment utilization and industrial demand. Together, they give a cross-section of consumer, enterprise, and industrial cycles.
So for listeners building context, watch top-line growth beats, margin drivers, and forward guidance, especially around AI spend and end market demand.
Couldn't have said it better. Plus, be ready for volatility. Earnings reactions can be brisk.
Speaking of brisk, GM's next.
General Motors announced a one-time $7.1 billion Q4 charge after writing down battery and EV factory assets, roughly $6 billion tied to pulling back EV investments, and about $1.1 billion related to China restructuring.
That's a significant accounting hit, and a signal the company is reevaluating capacity after shifting federal incentives and cooling EV demand. It mirrors similar write-downs at other legacy automakers and suggests an industry reset rather than a one-off hiccup.
How should we interpret that as technologists and investors?
For technologists, it means the timeline for EV scale and related software monetization may lengthen. Some projects will be deferred. For investors, it's a capital allocation pivot. Less CapEx in some EV programs, more focus on profitability. Suppliers, battery partners, and local employment plans will feel it.
So it's not the death knell for EVs, but a recalibration.
Exactly. Policies, incentives, and consumer adoption curves still matter. The industry is optimizing for realism.
Quick segue to market sentiment pieces.
Finally, Yahoo Finance ran a roundup with mixed market calls, bullish picks for a couple of Dow stocks, a single buy and hold recommendation, warnings about 2 tech names that could sink portfolios in Q1, and tax loss buying opportunities in other tech names. They even laid out 3 stocks for new investors to build around.
It's a nice reminder that market commentary is heterogeneous. Different time horizons, risk tolerances, and triggers lead analysts to opposite conclusions. One person's tax loss opportunity is another's value trap.
So how should listeners parse conflicting advice without getting whipsawed?
Start with your horizon and risk profile. For shorter-term moves, watch catalysts and liquidity. For long-term positions, favor quality businesses with durable moats. Think cash generation and structural tailwinds. Use diversification. A couple of steady Dow names, selective growth exposure, and play tactical ideas with smaller allocations. And remember, tax loss mechanics can create noisy but sometimes actionable windows.
Good pragmatic advice, and a reminder that headlines are conversation starters, not investment plans.
Amen. That's our Tech News Roundup. We'll be back next week with more. The preceding audio summary was created at jesterengine.com, where you can find and verify the original sources.